Is inflation starting to deflate and go lower? How did Jerome Powell's remarks cause a stock market explosion to the upside? Which of these stock rockets is likely to climb even higher? Hang on for what might be the ride of your life. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, I got good news for you today. We are not currently in a recession. There's fears that we may go into a recession, but currently the third quarter inflation figures and the gross domestic product, the GDP, support the idea that we are not in a recession. The third quarter GDP, the gross domestic product, came in at 2.9%, which was much higher than I expected it to be. And the inflation numbers were good. The personal consumption expenditures came out on December 1st, and the headline number, the headline PCE number, came in at 6%, and that was 0.3% lower than the previous month. So that showed that inflation is probably going down. And the core PCE was good also. The core PCE excludes gasoline and food, just the things you need to live. But that tends to be more sticky, and the Fed likes to use it because the prices don't change as fast and tend to be stickier. But the core PCE went down by 0.2% and was only 5%. It was 5.2% the previous month, and this month it was 5%. So it was a reduction of a negative 0.2%, which was great news. But the big event of the week was a surprise to me, although I guess it shouldn't be, because whenever Jerome Powell speaks, something's going to happen. They will find something in his remarks. But he came out on Wednesday in a speech to the Brookings Institution, and he was much more dovish. He didn't really say anything new. It was the way he said it and kind of the broader picture and what he was hoping to accomplish. And you got the impression that he wants to get it to a level, and let's say he wants to get it to the perfect level, and now you got the sense that he's more in the process of fine-tuning it according to what the numbers are, and is likely to be less aggressive and less hawkish, and the rates are likely to be smaller and slower, which the stock market absolutely loved. As soon as he started the speech, the stock market started going up, and it started exploding. The more he talked, the more it exploded up, because he was relaxed and dovish in tone. And when you're in a situation like this where it's exploding upwards and you got to get a trade on quick, I always go to TQQQ, which triple leverages the QQQ, which is the 100 largest companies on the NASDAQ, and includes all the FANGs and Tesla and Microsoft and Apple and Amazon and Google and Netflix and all my favorites, actually. So I go to that, and it's a quick trade. So on Wednesday, the QQQ went up about 4% or maybe a little more, and the triple Q went up about 12% or maybe a little more. But I was quick enough to get into the TQQQ with $200,000. And I caught 10% of it, so I made a quick 20,000. These are the moments that you live for in the stock market. They happen Sort of rarely, but not that rarely. That's why I like to be on my toes, especially when you're doing the triple Qs, the TQQQ. That is so rewarding if you can catch it right, because it triples the fun, and it is fun, and it's good to have some fun after such a dreary year. Prior to Powell's remarks on Wednesday, which sent the market skyrocketing, prior to that, Apple was having trouble staying above 140. And there was a thought that if Apple went below 140, it would probably drag the rest of the market with it because it's such a huge and influential technology company. And also, Apple was having trouble with China. Apple has a plant in China that's run by Foxconn that makes 70% of Apple's phones. And there's been some lockdowns in China because of the thing as we know it that causes health problems. And so China has a zero tolerance policy and locks everything down. And this plant, they were having to replace some of the workers that were getting sick. And then they promised the new workers these extra bonuses, which there was controversy about whether that was being paid on time and so forth. And also the new workers and all the workers in the factory were increasingly being isolated, which they did not like. They wanted freedom. Imagine that. People want freedom. I guess it's sort of a thing that's catching on around the world. But anyway, Apple was struggling to stay above 140. Powell comes out with his remarks, and Apple finished the week above 147. Apple seems to be on firmer ground now. We will see what happens. I think we're in the holiday spirit here, but Apple is concerned because if that factory in China still has problems producing the phones, it could reduce Apple's production of the iPhone by about 30% this year. Another major thing that affected the stock market was Friday's jobs report. It came in at 263,000 when 200,000 jobs were expected to be added. So it came in much hotter, okay? And the Federal Reserve does not want to hear that we're getting a hotter jobs report. But, when you look at the overall trend over the years and over the recent quarters, the trend is down. So it really was an overreaction. And the more the day progressed, the more it was less and less of a reaction. I mean, initially at the end of the day, I was a negative $11,000 down. By the end of the day, I was $1,500 to the positive. And this is doing active trading. And when you're doing active trading, they always take a little off the top. And you should actually be down a little bit. But I actually ended up in the positive because what the market figured out is that this is a nothing burger. And I'll tell you why. Even though the number of jobs increased by more than the stock market expected, the unemployment rate still stayed at 3.7%. And that's the big deal in my mind, is what is the unemployment rate? And basically it stayed the same. So it was actually a nothing burger. And the overall trend, if you look at the big picture, indicates that we're still trending down. So this is a strong economy. This reminds me of the stock market of the 1980s. The 1980s were a very profitable time to be in the stock market. I made a lot of money in the 1980s, okay? Inflation was a problem, but it was a problem that was being solved, and they were increasing interest rates, much like they're doing now. And it was it was very profitable. It was the Reagan years, you know. It was a very good time to be in the stock market. And I feel it's similar to the time we're in now. We're climbing the wall of worry. And so when I hear we're climbing the wall of worry, we should be less worried, because that's actually a good sign that stocks are trying to take off, but they're being constrained by the interest rate hikes. But you have an economy that's strong enough that it wants to take off, which is really very positive. We are not in a recession right now. The third quarter GDP was 2.9% and is projected to be positive for the fourth quarter. And we also have the seasonality of stocks generally going up during the holiday season. So I think we're in for positive results, at least until December 13th. And we have to see what the CPI is on December 13th. That is all important right now. So in the holiday spirit, I've been checking my list of stocks that I want to buy. That I love, and I, of course, love Tesla. And Tesla, there's at least two good reasons to buy it right now. It's pulled back somewhat, but then it's starting to go forward with Jerome Powell's remarks. And it is selling twice as many cars this last November than they did in November of 2021. So it's definitely bullish from that point of view. And also, they delivered 3 semis to Nevada, to Pepsi. And they actually have working trucks now. And I think they've been testing them out for the last year with Pepsi. And now they have the 3 deliveries. And they have a contract to deliver 100 semis to Pepsi. So this is a very positive development. The electric semi is a real thing, and that should drive sales, plus all the other positive things you have going on with Tesla. And in the long range, they're basically working on human perception and trying to make it so cars can drive themselves. They're into robotics, which they're using in their factories to produce the Teslas. And they're working on the actual robots, which are going to help us in the future. And that's very futuristic and very long term. But I think we have enough positive actual news on the home front to buy it on the dip. And looking at the 1-month chart of Tesla, you can see that it's gone from 216 about to well below 200, but lately it's had the poppage, which I always look for to rebuy a stock again. I'm an active long-term trader of Tesla, and I buy it on dips and ride it up until it doesn't look like it's going to go any further. And I think we have a ways to go with this, with the solid positive news. And look at that price target for 1 year out, 264. What is that? A 25% return in a year, which is good, especially during these times. And in the last month, Google has been making steady progress, and its PE is only 20, which is low for such a major technology company. And it's had a strong dip, and it's had a strong reaction to Powell's remarks, and I think it's going to continue to go up. Looking at the 1-month chart, you can see that it's gone up from about 84 to over 100, and I've been buying it on the dips. And when you can get Google below 100 and you got some confirmation that the market's going to go up for a while, I think it's time to buy it, and so I indulged myself. And the 1 year target is like 127, so there's still good money to be made. Cross Country Healthcare, whose symbol is CCRN, is a staffing a company for doctors and nurses and other professional staff. And it's been very profitable. Its price to earnings is only about 6, but it has an earnings growth rate of about 40%. And looking at the 6-month chart on CCRN, you can see why I've been buying shares lately. It's been consistently going up, more or less, for the last 6 months, but it recently took a big dip, and not a big dip, but a moderate dip, and I've been adding shares, and it's recently popped up in the last month and responded favorably to Powell's comments. So I think we have some room to grow here with such an outrageous earning growth rates as 40%. Every once in a while, I like to speculate on a cheap stock, and there's a lot to rave about with RAVE Restaurant Group, whose symbol, of course, is RAVE, R-A-V-E. So I'm going to rave about this stock because its price to earnings is only 3. Wow. And then its earnings growth rate is 35%. Yes, there's a lot to rave about with RAVE. And looking at the chart, its present price is around $1.69, and it went down to $1.20 recently. I'm showing you the year-to-date chart, but you can see it took a kind of a big dip there, but then it's working its way back up, and so it's showing the poppage I always look for. So I think I decided to speculate with 10,000 shares because the statistics are so good on this stock, and I think there's more to come. One of my favorite stocks is Super Microcomputer, SMCI, good old Super Microcomputer, and it's been a good performer year to date. Its price to earnings is only about 10. Its earnings growth rate is about 41%. They mainly make servers and other types of computer equipment. So it's a very solid technology company and stock, and I'm going to stick with it. I use dips mainly to buy as a buying opportunity. Looking at the chart year to date, you can see that it's made good progress, but it's had a recent dip, and I use that recent dip to buy more shares because it's been such an outstanding performer with a low PE and that outstanding earnings growth rate of 41%. A technology stock that forces me to own it. There's things about this stock that it might be a little overvalued, but it just keeps going up, and so I'm forced just to keep making money on it. And the name of that stock is AHR. Its symbol is AEHR. They make semiconductor equipment, and they have a good earnings growth rate of 39%. And AEHR has an interesting year-to-date chart. In the last 3 months, it's doubled, more or less. It's gone from around 13 to 26. And it has that good earnings growth rate of 39%. And on the chart, its trailing price to earnings is 80, which is way too high. But a person can calm down a little when you see that its forward price to earnings is 31, which is still high and probably too high for this market. But I'm going to hang on to it until it starts to take a dive. And so far, it seems to be hanging in there. So with some trepidation, I'm hanging on to this stock, and I'm in it for the ride right now. Canadian Solar is my favorite solar stock. Its price right now is around 36, and its value is a solid 47. Its trailing price to earnings is 13, but its forward price to earnings is around 8. So it's definitely making money. It has a very solid earnings growth rate of 30%. So I'm in for this for the long term. And as you can see, it's been in a holding pattern largely with some bumps and dips. And I try to buy it during the dips. And I think that outstanding earnings growth rate of 30%, especially for a solar company, usually they are very much overvalued. And this stock is undervalued. So it's got that solid earnings growth rate with a very reasonable forward price to earnings of 8. Eventually, this one's going to come in, I believe. TAN, T-A-N, is the symbol for my solar ETF. And I just love it that the symbol for it is tan, like you're getting a tan, right? So I love the area. I think it does a lot of good for society. And looking at the chart, you can see the year-to-date chart shows that it's been a bumpy ride, but I sort of planned for this, that it would be a bumpy ride with a slight bias to the upside, and I planned to buy on the dips, basically because I believe in the industry. And I have 3 triple leveraged funds that I invest in. I get $3 for every dollar that their index goes up. And the one I believe in the most is CURE, that's C-U-R-E, like you cure a disease. And this is on the health care sector, and it's triple leveraged. And it's every area of health, of the healthcare sector. It's biotechnology, it's staffing, it's hospitals, it's everything. Insurance, of course, is important with healthcare. Anything connected with healthcare. So it ends up being fairly broadly diversified just because the field is so diversified. My second triple leverage ETF is a DFEN, that's DFEN, and they're triple leveraged on companies that make weapons of war like Raytheon, like Lockheed Martin, make Stingers, they make the Javelins, and we have a war going on in Ukraine. So countries are very invested in protecting themselves, and countries like Raytheon are getting contracts to provide weapons to Ukraine. So this looks to be very profitable. I also am invested in the triple leveraged fund FAS, F-A-S, which is the financial services sector. And this ETF is mostly banks and any institution that performs financial services. And in the last month, FAS, which is in red, has made about 16%. CURE, which is in green, and which is the triple leverage healthcare fund, has made about 14%. And DFEN, the weapons ETF, triple leverage, has made about 11%. And that's the way I roll. Kindly smash the like button if this has been helpful. Be sure to subscribe and hit the notification bell if you want to be notified. Good luck to us all. I think we're on firmer ground, and happy holidays.